In this video, we're going to be focusing on home loan fixed interest rates. As a lot of people can see, there's been a lot of rate increases in the big six major banks in Australia. We've seen CBA and Westpac Group going up 3, 4 or 5 times over the last kind of 2 to 2.5 months, which is making a lot of the mid-tier banks follow them as well on 2 and 3 year fixed rates. Now, this has been impacting a lot of clients recently because a lot of the mid-tier banks lagged a little bit behind with increasing their rates to follow the majors. So at the moment, you're seeing a little bit of a gap between what you can get with the mid-tier banks to what you can get with the big six banks. Okay, and that gap's going to close over the next 1, 2 or 3 months. Now, obviously, we don't have a crystal ball, but normally when the majors move, the majority of the other banks follow. Now, what we're doing with the majority of our clients that are purchasing and presenting a contract or doing a refinance, we are protecting their rates for up to 90 days using a feature called Rate Lock. Now, Rate Lock is a product that can cost up to 0.15% of the loan balance that you're fixing, depending on the lender that we're looking at. Now, from a fee standpoint, you could be protecting yourself because some of the rates, I'll give you an example, you used to be able to get maybe a 1.89% on owner-occupied 2-year fix with the likes of CBA or Westpac. Now that's closer to a 2.49 or a 2.59, depending on the circumstances of the lender and the client. All right, so if you're still able to get maybe a 2.09 or a 2.19, you could be protecting your rate for up to 0.4% of increases over the next 1, 2 or 3 months. So a lot of people are seeing a lot of value in using the rate lock, and at the end of the day, they do not want to go through a 2+ month process for refinancing or a 6-week process for settlement for purchases, and then get halfway or 3/4 of the way through and then be hit with 2 or 3 rate increases, because not a lot of people know that the rate that they get is the rate on settlement, not the rate that they apply for originally. So we are at that pivot point in the market where all the 2 and 3 year fixed rates have started going up, and conversely, all the variable rates have come down pretty much the same amount. So your variable rates used to be your 2.4 to 2.6 on owner-occupied. Now it's close to a 1.99 to about a 2.19, depending on the lender that we're looking at. All right, so there is a lot of value out there on the variable rates at the moment, but just making sure everyone's aware of where the market's at, what fixed rates are doing, and what you can do to protect your clients. Pretty much every client I've got at the moment that wants a fixed rate product has paid the rate lock fee willingly, and a lot of the time they're with a lender that's giving 2 or 3 grand cash back for the refinance anyway. So they're just allocating some of that money that the lender's going to give them anyway and using that as a rate lock feature to protect their rate and make sure that it doesn't jump up mid-application. If you've got any questions, leave me a comment or send me a message. Just trying to get that great information out there. You have a great day. Bye.